All right, next up. Medtronic. Beep boop beep. It's like a doctor, but if it was a robot. Medtronic. Is that what they actually do? They actually make doctor robots? Or medical robots? Distributes and sells device-based medical therapies to hospitals, cardiovascular portfolio, neuroscience portfolio, medical surgical portfolio, diabetes operating unit. I was expecting a fourth portfolio. I got duped. I mean, I'm guessing. I don't know. I saw something here about a robot. Yeah, robotic assisted surgery system cornerstone of new robotics program. It's robots. It's robots all the way down. Yes. Where'd my mouse go? There it is. Have a quick peek at the chart. Had a rough Monday, just like everyone else. This is very stocks go up. This is a steady rise. Even over the 5-year, fairly steady. Was doing well going into COVID. Is doing well out of COVID. Dividend aristocrats. What are you even talking about? Robotic assisted surgery. Putting health to knowledge. Steady revenues, but then I don't know if this is them just recovering from COVID or if this is actual growth. That's an open question. Financials look weak. That's something I want to see. But then again, it's from Simply Wall Street. I will choose to trust them. Probably not a good idea, but we'll see. Is up 2.9% over the past month. However, in this article, we decide to focus on its weak financials as long-term fundamentals ultimately dictate market outcome. In general, yes, it's not exactly a solid rule, but sure. Return on investment, return on equity. Oh, not again with this ROE calculation garbage. Yes, we throw a whole lot of math at you, and therefore this is a buy. Return refers to a company's earnings over the last year. One way to conceptualize this is that for every $1 of shareholders' capital, company made 7 cents in profit. Is that good? Based on how much is profit, choose to retain. We evaluate the companies. Comparison of Medtronic's earnings growth and 7%. Base ROE is not much to talk about. Last 1 year earnings growth. They had negative 20. Oh, wait, what? Yeah, they're right. Well, also, 2021 just started, though. So how do they have numbers for 2021, for all of 2021 already? That's kind of... I choose to ignore that reality. Investors consider this expanding healthcare business. Oh, they're talking about a different company. I was like, wait a minute. This had a massive dividend hike? It already has a not terrible dividend. And slow down because I see earnings per share of 266. That seems incredibly low. All right, these numbers are more price to earn. Wait, earnings per. Oh, sorry, I was thinking of the wrong number. No, price. I thought my brain short-wired, and I thought price to earnings was earnings per share. No, it's not. Those are different things, Matt. What are you doing? You're all up in the internet claiming to know what you're talking about, and you are proving otherwise because you are an idiot. Why? Yes, I am, Matt. Thank you so much for pointing that out. This is dead company. Why do you say this is dead company? Why do you say this is dead company, and why can't you just say it with proper English? This is dead company. Why? I kinda feel the same about this as I did about McDonald's. It's very, very middle of the road. It seems mature. Very. I can see it going up with the market in general, but not a whole lot of growth perspective from the from beyond that. But maybe I just failed to pick up on something. I'm gonna give it a. Well, there was also those earnings. There was also those earnings that were going up, but I didn't know if that was due to their business expanding or if that was due to them coming out of COVID. If I had those answers, that would be nice. I think. Actually, you know what? I've had this discussion before where I brought up paint and I tried drawing a bunch of charts explaining my thinking. Hold on, let me try to do that again just for my own sanity of walking through this for myself. Where is paint on my friggin' computer? So 2020 earnings was more or less in line with previous years, right? So for previous years, if you assume that the earnings, and I don't see why they would be, if you assume that the earnings are roughly steady for the entire year and thus kind of equal across all quarters, then the year for 2020, assuming it started low, would have to look like this for the math to work out. For this to equal this. Okay, you kind of following me? Because, like, for example, take this, put it on top of here, or no, rather cut off the top of this, put it on top of here, cut off the top of this, put it on top of here, and you have a chart that looks kind of like this one. So they are. So if you assume this, and I think my math and my logic check out, then they ended the year higher than where they were at any point in previous years. And that can continue into 2021. I know, this is atrocious, but yeah, you know, I think I just talked myself into a buy. Because I think that logic with the charts check out.